Should you buy silver now, even after it has already delivered a massive 180% profit in last year? Or is silver preparing for another 80% crash, just like the brutal collapse after the 2011 pump?
Today, we're going to break down both possibilities with real market logic and some hard facts. Back then, the entire market was dominated by paper contracts, which were easily manipulated by artificially increasing supply or demand. But today, the rising physical demand for silver has completely destroyed the influence of those paper contracts. We'll explain the full mechanics of how this works in our next video, so make sure you're subscribed for that. For now, let us focus on the incredible industrial demand that's driving this rally, so you can understand what's really happening before you make any investment decisions. Silver's price is rising for two major reasons. First, it's a precious metal and a global safe haven investment. Second, and this is the big one, the industrial demand for silver is exploding at a historic pace. Let's break down the biggest force behind this rally, a perfect storm of a structural shortage. The global silver market has been in a continuous deficit since 2021, and in 2025, this shortage is expected to hit somewhere between 95 and 149 million ounces. Now, mine production is around 835 million ounces. But recycling and other secondary sources simply cannot keep up with the demand. And here's the twist most people don't know. More than 70% of silver production comes as a byproduct of mining other metals, like copper and lead. This means that even if silver prices skyrocket, miners can't just instantly increase supply by flipping a switch. This long-term shortage is giving silver a powerful upward momentum, and many analysts believe this trend is set to continue for years to come. Now for the second major force, the explosive growth in industrial demand. This isn't just rising, it's exploding. Nearly 60% of all silver demand now comes from the industrial sector, hitting a record 700 million ounces in 2025.
The biggest driver is the global shift toward green energy and high-tech systems. Solar PV panels cannot function without silver, and each panel uses 15 to 25 grams of silver paste. With massive solar expansion in China, India, and Europe, this segment alone consumes 200 to 260 million ounces.
And it doesn't stop there. Electric vehicles use twice as much silver as traditional cars. Demand from batteries, electronics, and charging networks is rising every single year. AI servers, data centers, and 5G infrastructure all rely on silver's unmatched conductivity. This industrial boom is transforming silver into a true green metal, a core building block of our future economy. Of course, we can't ignore its role as a safe haven investment. Global tensions and economic uncertainty have pushed investors toward assets that hold their value, and silver has been one of the biggest beneficiaries. U.S. trade policies, inflation fears, and currency weakness have all driven investors into precious metals. Silver also gained a lot of momentum from gold's massive rally this year. We saw huge inflows into ETFs like SLV, and physical silver buying surged worldwide. Lower interest rates and a weaker dollar just added more fuel to the fire. Silver is no longer just an industrial metal, it's becoming a major financial asset.
Physical market tightness and squeeze dynamics. Silver inventories at major exchanges like COMEX and London have dropped sharply. This has pushed lease rates higher and forced short sellers to cover their positions. This squeeze added an extra boost to silver prices toward the end of 2025. Volatility increased, but the overall uptrend remained strong. All these forces, supply shortage, industrial demand, investor inflow, and market tightness, have made 2025 a historic year for silver. According to the Silver Institute and leading analysts, if these trends continue, silver could reach $80 to $100 per ounce in the coming years. This creates a powerful opportunity for investors, but the risk of volatility is always present. That's why you should avoid lump sum buying. Instead, invest gradually during dips to lower your average cost and maximize your profit potential. This silver rally reflects not just economic changes but a global shift toward green technology. If you are planning to invest, stay alert, follow market trends, and always seek expert guidance.